Hello everyone. Today was basically a pretty decent consolidation day for the overall market, even though the Nasdaq was slightly up 0.04%. Overall, it's basically flat from the day before. Volume was lower than the session before, so that's an overall positive to see. What I did not like to see was the way that we ended today's session. Quite a harsh little sell-off there at the end of the day, but really no harm, no foul. S&P 500 was down slightly on the day. Once again, the lower volume gives an overall day of good consolidation. Dow Jones Transportation Average was basically flat. The Russell 2000 was down slightly, 0.30%, lighter volume. So overall, everything pulled back and or was flat today on lower volume. Hard to complain about that. However, what's not hard to complain about is if you really don't see the lower volume in the overall market, then look at the ETFs, look at the SPY, look at the volume following the February lows. We have not had one single bar with above average volume the entire uptrend off the February lows. Look at the Qs. We have not had one single bar of accumulation outside of the start, I guess you could say, of the attempted bounce attempt back here on February 10th. After that, everything is below average volume. The diamonds show the same thing. There is absolutely zero accumulation off the February lows. And then the IWM, the exact same thing. Not one single day of above average volume accumulation in the ETFs. All of this matches the index as this market just continues to trend higher on no volume. That is why, once again, it should be no surprise that we have no amazing, huge new long signal tonight. The only quality long signal that we have is EDUC. EDUC is so thin that it would be ridiculous to have a large position. And EDUC, besides being a CanSlim quality stock, was it not confirmed in any other scans today. It barely missed the volume requirements to make the price volume BOP surge scan, but at the same actually it might have made it, but it's trading not enough volume. It's looking for at least 50,000 shares for average daily volume. I think this one's only averaging about 30,000. So it did have big enough volume overall to make the price volume BOP scan, but because of its low overall trading volume, it didn't make it. So technically it's a 1% new long position. I thought about increasing it up to 2%. I might still do 1.5%, a half percent for being in the invisible price volume BOP scan, because if volume wasn't a requirement, it would have confirmed. So maybe 1.5%. But that being said, we're still going to risk about 7% before we know that we're long on the first cut loss area. And then if we use the absolute base lows of 1090, we're risking right around, it's going to be right around 10%. Yep. So it makes it tough to want to increase the position size beyond even 1% to begin with. But I might do 1.5%. But either way, you know, it's going to be in between 1.5%. But this is a very nice looking technical setup overall. It just really, the consolidation pattern isn't necessarily long enough, but the price is touching the 20-day moving average, which is something that I absolutely want to see in a great looking consolidation. So to me, it's good to go. So EDUC, 1 to 1.5%. That is the only quality long signal. Now, on that note, I have 3 other speculative long signals. SELF is one of the higher quality ones. Has a nice dividend. It's been under some huge accumulation ever since its February lows and the uptrend here. Pocket pivot point signal today has had max green BOP for 5 days in a row, making my max green BOP scan. 1% new long position, using today's low a day as the final sell stop level 427. But that's a pretty good speculative long position. And then NADL, kind of diversifying our assets away from some of the other names. This is an oil stock. It's not producing a pocket pivot point signal, and the 20-day moving average isn't necessarily touching price, but it's a pretty solid move. It looks like that it wants to continue to explode higher. Considering if it gets back to the 200-day moving average, we're looking at a double. I don't think that it's that risky to look at this 12% potential loss. But if you want 308, the first sell stop, 292, the final sell stop, no more than 1%. It was in my max green BOP for 5 days scan. And then also HH It made my max green BOP for 5-day scan and was also confirmed in the price volume BOP scan. But as you can see, very speculative trade here under some very strong accumulation off the January lows with no distribution, especially as it consolidated right here. No volume whatsoever. And then it started to move again on heavy accumulation. But because it's up 15% in one day, even though it's in 2 scans, there's no way in hell this could be a 2% position. 1% overall. I think that's good enough if we're looking for these things to double like HH and NADL. Chances are they won't. But since we're looking at them to at least double and we got to risk a little bit more than we want to before we know that we're wrong, they can only be 1%, no more, no less. Self could be bigger, but I don't recommend it. And EDUC might be bigger, but the most I would go is 2%. This market continues to look very, very shady overall. The lower volume as we continue to move higher right into resistance levels just does not look healthy. It has this market looking like it's basically going to just be range bound, stuck in between the 2016 highs and 2016 lows until we see volume show up either here on a sell-off or on the accumulation on an up day. It's just going to be tough to really marry a side. But Facebook doesn't look healthy. Netflix doesn't look healthy. Amazon is re-enter my perfect speculator scan, but it still doesn't look healthy. And Google doesn't look healthy. Priceline, not terrible either, but not great. So this market could still break either way. I think it's silly to be bullish or bearish here. Keep an open mind, keep positions small, and remember, cash is still king. We have no sells on an end-of-day basis, no covers. I was knocked out of half of my ANFI today. I was knocked out of half of my JBSS today, and I was completely knocked out of STMP, but on an end-of-day basis, they're all true. STMP by only 1 cent. Because it needed to close below 113.08 to be a full sell. 113.09 prevents that. But it's kind of rolling over there in heavy volume. I don't like the way it looks. JBSS, it's lost its green BOP. And uptrend already looks to be slightly in danger. And ANFI, same thing. Especially if this market continues higher. We'll continue to rotate out of these safety stocks until those good stocks. You saw what happened to gold today. Utilities still look good. So at least that's a good side of the market. RYORW looks really good. But overall, range-bound market until it proves otherwise.